You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is Monday. It is 2 p.m. Central, 3 p.m. Eastern. It is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we go beyond the traditional world of your Apple and your SPY and your VIX and your Tesla options and explore the exploding realm of crypto, all things derivatives. We're going to talk the volatility, the volume, the unusual activity across the spot, the futures, the options, a whole bunch more. Of course, you folks continue rating and reviewing the program wherever you find it. It's hard to believe. To me, this is still the latest, the new young upstart addition to the network. But today's episode is actually episode 100. So yes, listeners, this is our 100th episode spectacular. We have a lot in store for us. Of course, for all of you out there, there's a ton of new listeners joining this program all the time, particularly those of you coming from outside the world of traditional options. So quite frankly, there aren't many people, really anyone out there talking about the intersection of crypto and derivatives. So if you like what you hear, keep rating and reviewing. It really does help new folks discover the program in these trying and troubled times. And of course, keep those questions coming. We do love to hear from you folks out there. And of course, we're going to roll out the crypto hot seat here from a great guest in a moment because it is our 100th episode spectacular. We have a lot of folks angling to join us here to celebrate the milestone that is Crypto Rundown 100. So without further ado, let's open up the guest hotline right now. See who's joining us here first.
This is Greg from Genesis Volatility. Just wanted to say congratulations to the 100th episode of the Crypto Rundown. No one else is talking about crypto options like the Crypto Rundown. amazing.
Well, thank you for that, Greg, and the whole team over there at Genesis. You guys are doing some interesting stuff yourselves. Of course, you can kick the tires and light the fires for yourselves over there at gvol.io. If you're interested in the intersection of crypto and derivatives, and you listen into a show like this, so you probably are, gvol.io is the place to go to begin your journey. Now it's time for us to continue our journey and to roll out the crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto, derivatives, and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the old hot seat is a newcomer to the program and indeed to the network. He is Jerry David, the president of ARCA Labs. Jerry, welcome to the Crypto Rundown program.
Thanks, Mark. Appreciate being on the show. Congratulations on your 100th episode, and we're super excited to be in the hot seat today.
Yeah, you have good timing. You came on an auspicious episode, sir. So if you're wondering why we're in such a celebratory mood on the show here, that is the case. But Jerry, as we are wont to do with all of our first-timers here on the program and indeed on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial and indeed the crypto space, as well as how you found your way to becoming the president over there at ARCA Labs.
Yeah, thanks, Mark. I'm Gerald David. I'm the president of ARCA Labs, which is the innovation division of ARCA. For those of you that are not familiar with ARCA is an asset management firm that invests and innovates in the digital asset space. The vision for ARCA is to be the single destination for investors who want high quality asset management products to get some exposure to digital assets as a whole. At the firm, we've got three different categories of products. We have an actively managed hedge fund. We have passive vehicles. And then we also have ARCA Labs, which is the business that I run, which essentially is working with SEC registered products and injecting blockchain into them. And our first product is the ARCA US Treasury Fund, the first of a blockchain transferred fund suite of products that we're going to be rolling out.
Yeah, a lot to obviously break down there. We previously had the other portion of your business there, kind of the investment management, asset management arm on the show back. Doesn't seem like it was that long ago. It was all the way back on May 13th of last year when we had Jeff Dorman, your CIO, on the program. So obviously, a lot has happened in the world of crypto, and indeed a lot has happened in the broad market and indeed the world since May of last year. But let's dive right into it here, Jerry, because you kind of just touched on it. You guys are breaking new ground with something a little bit interesting out there, a little bit different. It's your ARCA US Treasury Fund. What the heck is this, and what is it that makes it unique and distinctive?
That's a good question. So, yeah, there's a lot of treasury funds that are out there, but this is the first treasury fund that issues its shares as a digital security. The background here, Mark, is that we are working with the SEC for probably about 2 years in order for us to create this product. And the product itself is super special for a variety of reasons. The first is that, as I said, it's the first fund registered under the 40 Act that issues shares as a digital security, which then offers up a tremendous amount of different opportunities for folks, peer-to-peer transfers, some additional protections that are offered under the 40 Act, obviously, and then some other different protocols that we've added called 1404 that allows for some special protections, including allowing for folks who've lost their tokens to have them replaced, which is something that's super novel and super ideal. One thing about the fund is that the fund itself is comprised of a portfolio of U.S. Treasuries. So essentially, upon subscribing to the fund, you receive one share of a digital portfolio of Treasuries. That share is called ALTCOIN, and ALTCOIN is then delivered to the wallet of the subscriber to that fund. Therefore, it's the first digital asset associated with the fund that then is transferable as well.
So it still is your traditional treasury fund in terms of the holdings. Some people might hear that and they think that inflects with crypto and think somehow you're going to try to maybe approximate the yield on a treasury portfolio using crypto assets. That is not the case. You are buying traditional treasury assets. It's just in the delivery of the actual fund shares itself where the innovation applies there, Jerry.
That's absolutely right. And part of the mandate of ARCA Labs is to inject blockchain into traditional fund structures. For this fund structure, we chose a closed-end fund, which then means accordingly we're required to have the type of service provider, so an administrator, an auditor, a distributor, a technology provider, an advisor, a custodian, and so on and so forth. And all those different elements do exist within our fund structure. So just like you would have NAV calculated a regular fund, our administrator reaches in, looks at our portfolio on a daily basis, assesses what the assets are in the fund, takes a look at what the number of tokens are that are outstanding, does some simple calculation, and comes up with, our NAV. It's interesting to note, Mark, that our NAV was struck for the first time on July the 6th, which is when the fund itself was launched, July the 6th of last year. That NAV has maintained a stable value. So our token, if you're in possession of ALTCOIN, it also does have two different unique attributes. One of which is because you nailed it a second ago. It is a portfolio of U.S. Treasuries. It's an interest-bearing account. The second thing is that, right now NAV has been struck at zero, which makes this a very, very interesting because now you have not just, kind of something that was created under the 40 Act, but you also have a low volatility token as well, which can be used for a whole host of other different use cases.
Volatility. You said the magic word in the crypto realm these days, but it does raise an interesting question. The subtitle of just about any article about anything crypto related these days is, of course, the volatility, the movement. We have a whole show predicated on it right here. You're on it right now here, Jerry. So it is kind of the byline of anything to do with these markets is how volatile they are. And yet you guys decided to go out there with your first product and go at the relatively staid world of treasury funds. What was it that made you decide, you know what, this is where we need to disrupt first, the world of treasury funds, Jerry?
Yeah, it's not an obvious choice. But when you take a look at what the thesis was originally, it then kind of starts making sense. So we recognized that there were a couple of things happening in the marketplace. The first thing we recognized was that, regulation was going to become increasingly more and more important. And this is dating back to about 3 years ago. And that's obviously proven true. You've seen, both the CFTC and the SEC step in, and there are layers of regulation that are being imposed right now to provide for customer protections, right? The second thing that we noticed, and we believed 3 years ago, was that interest-bearing accounts were going to be very interesting. And we believed that there would be a role for that, which is why we did choose U.S. Treasuries. And then the final note was we believed that if we could create a token that was able to offer those other two benefits, yet maintain a stable value, that it could potentially be a game changer in the respect that under the 40 Act, it would be a fund and a fund structure that many are aware of and feel comfortable utilizing, and then ultimately could be used for some of these use cases, including treasury management, and others.
And, I say that it isn't the most obvious choice, and yet the treasury space of late has been making some headlines and causing a little Sturm und Drang of its own. Have you seen a little bit of uptick in interest over the last month and change as treasuries have now become front and center in the headlines there, Jerry?
Yeah, I think so. And, one of the reasons, obviously is the movement on U.S. Treasuries right now. I think another one right now is that folks are out there looking in the marketplace and looking for alternatives that they could use for three different reasons. One of the reasons I think is that folks are recognizing that there's a changing economic environment out there for sure. And as these global macro environments continue to change, monetary policy strain, market turbulence, and other elements is creating interest in what we're doing. The second thing are that folks are recognizing that digitization right now is here to stay. And if folks are not embracing a newer technology, then the third thing is going to happen, which is that they're not going to get rewarded as part of key company valuations, where folks right now are demanding innovation on different companies. So we're seeing a lot of interest right now in the fund, and we're really working really hard to educate as many people as we possibly can on the intricacies of digital securities.
Well, let's continue that education process a little bit. This is a treasury fund. Obviously, anyone can invest in it, but you seem like you've targeted and zeroed in on corporate treasurers in particular. Why did you feel that was the perfect target audience for this fund?
So there's been a ton of different talk about treasury management. In fact, I think it's probably been the buzzword in the space for the first quarter of this year. And I think that there's been a lot of talk about that because there's been a lot of activity into the space, highly publicized activity, right? We talked on the show before about kind of MicroStrategy and Square and MassMutual and Tesla and their combined interest in acquiring Bitcoin under the guise of treasury management. And we're totally supportive of that. We think that's a really, really great use case for Bitcoin. But we also recognize from the conversations that we're having with corporate treasurers and others who sit in that organization, there's a time and a place for each different asset that's out there, right? And that's why corporate treasurers are using a portfolio that's comprised of equities across the tips and gold and fixed income, treasuries, cash, real estate, and others. And those are because these are the different tools that these treasurers have. Bitcoin is another tool, right? And what we've seen so far that folks that are buying, Bitcoin are being rewarded in many of the ways that I mentioned a second ago, but certainly because of the price appreciation dating back to the last, 8 or 10 months or so. The other thing that I would say that we found in those conversations are that not everybody is 100% comfortable, though, with utilizing Bitcoin. And it's specifically to the word we mentioned a second ago, the reason that your show exists, which is volatility. It's not obvious. Bitcoin, that is not obvious as a treasury management solution. And we found that folks, when they're starting to dip their feet into the marketplace and starting to try to understand digital assets, a token that has significantly less volatility, that looks like an instrument they know, treasuries, right, and has some of the protections that they're also aware of under the 40 Act, have caused people start gravitating towards us and having conversations about how we can implement ALTCOIN as part of their treasury management solutions. And what does that really mean, right? Because, this is now we're talking about getting a digital wallet and all the different things that, folks when they first getting started in this space have to encounter. And when you're dealing with larger scale financial institutions, those treasurers and other folks are generally conservative by nature. And we found that the conversation surrounding a lower volatility token that has, some of these protections we mentioned earlier today is quite an attractive alternative to sit alongside treasuries and maybe could act as a, treasury proxy for folks that are looking to get involved in the digital asset space.
Well, you kind of touched on the magical words there, of course, which is, Tesla getting into the Bitcoin realm. It has just reawakened this whole conversation about firms getting involved in the crypto space in various degrees. Probably not as directly as the way Tesla did it, but it does open the doors. I'm sure we've certainly seen it anecdotally here on our network. A lot more institutional players seem interested in this space and are asking questions. Have you seen a similar uptick in your target audience on the corporate side? There are folks coming to you now, whether it's because of the headlines, whether it's because of the volatility, whether it's because of the extreme and extraordinary price action, a lot of that delivered by Mr. Musk of late. Has this caused a corresponding uptick in interest in what you're talking about here, Jerry, this treasury fund?
It has. It really has, Mark. And it's one of the reasons for it, I think, is the tremendous amount of FOMO that's being experienced across the market, right? You've got all these different concerns with reference to treasury management that range from, volatility, right? FX volatility and fluctuations, technology issues regarding bolted on infrastructure, lack of real-time visibility into, kind of their own internal global operations and risk management. And as well as, kind of the growing transnational AML and KYC complexities that exist. And for all these very reasons, treasury management is top of mind. And when I think a lot of these corporate treasurers start seeing action happening at exchanges that they trade on, right? And more than just listing options and futures on like CME and on BAKKT, but we're talking about things like at the SFD, where they're just reorchestrating their entire, securities exchange, or even down, at DTCC, where blockchain is being incorporated. People are starting to understand and realize that there are some significant benefits by adopting this technology, and that this could, seriously impact the way that business is being conducted.
We have to conduct our own business here, Jerry, so we have to keep on rolling with the show. But before we close out the crypto hot seat, we like to leave our audience wanting more, Jerry. So you already hit them with the treasury fund. I'm sure you've piqued their curiosity. Anything else up your sleeve, perhaps a hint or a tease of what you folks are working on over there at ARCA Labs? Now is the time, sir. The floor is yours.
Thanks, Mark. What I would say is continue to watch the space. We just made an announcement at the turn of the year that we added 8 different custodians to allow for additional customer choice. We just announced last week that you can subscribe to the fund direct from your commercial account at Signet. And we just added our head of product and our head of growth, 2 seasoned executives for the digital asset space, which is hard to find these days. And our mission is to build out the suite of products. The structure we've created called the Blockchain Transferred Fund is going to continue, and the ARCA US Treasury Fund will be the first of that suite of products.
And Jerry, if folks want to know more, kick the tires for themselves on your U.S. Treasury Fund, where should they go? What should they do?
Yeah, if you're looking to learn more about the ARCA US Treasury Fund, you could go onto our website, arcalabs.com. You can even reach out to me directly at jd@ar.ca, and more than happy to explain and share a little bit more about what we're working on.
Well, Jerry, I appreciate you joining us on our 100th episode. Spectacular. I wish you good luck with your new fund, and we'll keep an eye on how this new fund and all your new developments over there at ARCA Labs, how they unfold in the marketplace in the coming months.
Thanks a ton, Mark. Congrats on the show, and appreciate the support today.
Now we have to keep on rolling right on into our next segment. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down the leading digital asset, aka Bitcoin. But before we do that, I do believe our guest line is ringing again. Let's see who's joining us next on our 100th episode. Spectacular.
Hi, This is Simon Ho from T3 Index, calling in to congratulate the awesome Options Insider crew. Mark and Jean celebrate 100 episodes of the Crypto Rundown. In my opinion, it is the industry's premier show, chock full of information about the exciting world of crypto. Congrats on this milestone and for giving the crypto community all the information they need to stay informed in this rapidly changing environment.
Well, thank you for that, Mr. Simon from T3 Index, a.k.a. the Spike's father, a.k.a. the creator of BitVol, which is already starting to trade for it even really has an underlying out there. So fascinating stuff afoot out there. You know what else has been fascinating, listeners, is the world of Bitcoin since we launched this show. You know, this show went live all the way back. It doesn't seem like it was that long ago, but it was actually January 11th of 2019. Let's look back a little bit as we kick off our Bitcoin breakdown and how much this space, this product, everything has evolved since then. When this show launched, a little bit of a different time in the crypto marketplace. Of course, we were there in the teeth of the crypto winter. Things were looking pretty dark. It was the darkest of days of the winter, as you will. The crypto market coming into the launch of the show, it actually had another down period. Overall, crypto assets had just lost about 13 billion in the previous 24 hours, and Bitcoin lost about 8% in 24 hours, which is when you had the coin shy of 4,000. It closed at 36.87 on January 11th, listeners. Another 8% was a pretty big sell-off. So there was a lot of concern still going on in this space. I know when we launched this show, people said to us, why are you launching a show about crypto? A, there's not really much options activity on it. And B, that asset class, it was a fad. It's dead. It's not going back to that 20,000 or near 20,000 level that it reached when the futures launched back at the end of 2017. People had already moved on. But we thought there probably was a little bit more interest to be had in this space. And so we dove in, and here we are 100 episodes later, still growing strong. And of course, the crypto market's doing so as well. So like I mentioned, we were at 36.87 back when we launched this show. When we ran the most recent analysis here, Bitcoin was at 56,656. That means up almost 1,550%, listeners. So quite the run for Bitcoin since we launched this show. Obviously, it's all due to the launch of the Crypto Rundown. We take full credit for all that. Volatility also a little bit of a different beast compared to where it was on our last show, but as you'll see in a little bit on this show, maybe not that different after all. It was at about a 73% on that show. You might say, well, that's not that much vol at all compared to where it has been, and you're correct. But stay tuned in a little bit. We'll see what's going on with vol right now. What else has changed in the landscape out there? DEREBIT was still the big dog. It was kind of the only dog back then. There were no CME options. The futures were still nascent. They were about a year and change old, but weren't doing that much volume yet. And DEREBIT on the options side, not doing a heck of a lot either. They did a whopping 2,084 contracts back on January 11th. So it wasn't a heck of a lot on that day. And of that volume, it was ironically equally split, about 50-50 between calls and puts out there. So obviously that's changed quite a bit, and the volume levels have grown quite a bit since our show launched as well. In terms of Bitcoin itself, let's look at where it is right now coming into showtime. Like we said, it was about 56,600. So that puts it up actually not that much since our last show. A relatively quiet week here for Bitcoin, up a paltry $381. That's a rounding error. That's nothing. That's wait 5 minutes in the Bitcoin market right now. But of course, some of that also reflecting the fact, remember, I just talked about how Bitcoin vol, when we launched the show, was at a 73%. Well, coming into showtime today, it was at 76%. So maybe the more things change, the more they stay the same out there, listeners. Bitcoin vol taking it on the chin. On our last show, it was more than 20 points higher. It was 98.25 on our last show. And you know, you've been listening to this show for a while, that Bitcoin vol has reached much higher levels in the last 6 or so months. So 76%. That is fairly low. In fact, folks outside of the crypto derivatives realm are starting to take note of that level as well. The folks at Coinbase had a write-up this morning. At the time they were analyzing it, it was 75%, and how that was pretty much the lowest they had seen since December 25th. And again, that's Christmas Day, listeners, so you expect near-dated vol to kind of come in a little bit that day. And of course, around 150% that we saw back in the middle of January of this year. So quite the saga from a vol perspective. But for everyone who says, oh, Bitcoin much more volatile now than it was back in 2019, maybe not so much, which is fascinating in and of itself. I didn't think we'd be seeing a 70 handle in vol anytime soon in Bitcoin, but there you go. It seems like the post-Tesla, post-Musk era with Bitcoin, vol kind of turned up to 11. Now it's kind of coming off the other side of that, which is fascinating to watch. Let's look out here at the 30-20 SKEW. Again, all this data coming at you courtesy of our friends in Genesis Volatility Land, gbol.io, the place to go to kick the tires and light the fires. The SKEW on our last show was 7.5, coming into this show about 5.8. Again, if you're confused by this terminology, don't know what any of this means, check out our Options Bootcamp and Options Playbook radio programs. They're super popular exactly for this reason. They do break down the options world in a little bit more basic terminology that you can use to understand not just the world of traditional options, but crypto options as well. Coming into today's show, hourly open interest, which is so nice to say. Maybe we can update the OI hour by hour. Still can't do that in the realm of Tesla and SPY and Apple options, but you can do it in Bitcoin options. And when you do it, you'll see that we've ticked up a little bit since our last show. Last show was just a tick north of 200,000. It was 201,000 contracts open in the world of Bitcoin options. Right now, it was 214,000. So again, bit of a far cry from where it was back in the days of January 2019. Not so much growth from the overall notional value perspective out there. People love to throw around the notional value of what's trading, what the open interest is. So we oblige you here on this program, even though it isn't our favorite measure for a variety of reasons we've broken down in the past here on the show. Our last show, the overall aggregate of all the major venues. So you're talking your DEREBITs, you're talking your CMEs, your LedgerX, your OKEXs, your bit.coms. I would say BAKKT, but they still have no open interest. So most of those other venues added together, it was around 14 billion on our last show. And coming into today's show, it was around 14 billion, pretty much unched with, looks like most of these numbers are pretty similar from last week. DEREBIT's still at about 12 billion. So they're still the big dog. Kind of a bit of a neck and neck still for number 2 with OKEX, just barely eking it out at 571 million. Then bit.com, number 3, 567 million. CME holding firm at number 4, 458 million. LedgerX coming on pretty strong there at 340 million for number 5. We talked about them on our last show, had some listener questions about them. In terms of U.S. options trading, when it comes to crypto, it's kind of CME and LedgerX, and that's kind of about it. So fascinating to watch how that end of the market is evolving as well. But overall net notional OI, not much of a change. Let's look at the actual contract OI, which is much more valuable and useful, I think, out here. And that has ticked up a bit since our last show, as we just mentioned earlier. The calls are about 112,000 strong right now. It puts them up about 4,000. So not a lot of growth on the calls. The puts, though, roar into life. They upped about 106,000 or up about 8,000 this week. So calls and puts net on the OI are now effectively equidistant, only 6,000 contracts separating them. So you also should know, if you listen to this show for a while, that's a pretty aberrant scenario. Usually Bitcoin is very call heavy, particularly when you get longer term. Obviously, the puts are starting to grow in interest out there. A lot of that's probably near dated contracts. I'm sure if you get farther out the term structure, you're going to see more call bias, but still fascinating stuff to see the puts starting to come more into fashion, perhaps a sign of things going on out there. All of a sudden, the vol coming in, the puts starting to grow. Interesting times in Bitcoin land. In terms of volume-wise, declining vol is kind of reflecting the declining volume. Not a lot really going up out there this past week. The biggest days were the 19th and the 17th with about 1 billion to 1.1 billion each. That's a lot. That's a decent amount of volume, but certainly a far cry from what we saw. 1.7 billion back on the 19th and other 1.8 billion on the 23rd of February. So still at or north the 1 billion level, but only a couple of times this week, actually. Every other day was less than that. 21st had about 918 million. Today, coming into showtime, was about 738 million. So it's on track to break that 1 billion notional value level if it keeps on rolling. But as of right now, a fairly, I guess you can call it a steady week. Not super light, not super heavy, kind of just plugging away out there. And that reflects what we're seeing out there. A lot of vol coming in, not a ton of volume hitting the tape. Where there still is interest, though, listeners, March is just running away with this. March has all the OI. Of course, this goes away in less than a week now. So That'll be fascinating to watch once all this goes off the board. But right now, it's almost 100,000, 99,000 of all those contracts outstanding right now are in the monthly March expiration here, listeners. That's up about 6,000 from last show, and just, again, increasing its lead over everything else out there. The next closest is actually June with a tick over 30,000 contracts open. And then you go back to April. April's actually got about 25,000. So April's got some paper, and that'll probably start picking up a lot of this near data paper once March goes off the board. But crypto options traders still love quarterly, so I expect June to come in hot and heavy. And even DEES is pretty active, almost 20,000 contracts open there already. So crypto loves a quarterly. Once March rolls off the board, we'll be interested to see if it goes straight to June, if it starts playing in April as well, a little bit of both. And not much love for May right now at all. So interesting to watch. What else is interesting is, once again, these strikes, listeners, where the action is actually centered from an options perspective. Pretty fascinating. The 40,000 strike is managing to maintain its death grip on the number one size position out there. It's about 17,000 this week. It's up about 1,000. So it has actually increased since our last show. Number two is the 48,000 strike. That's about 10,500. It's up almost 1,000 contracts from last week as well. So it's starting to add on a little bit there. Then number three, this one still cracks me up. It was tied for, I think, 4 or 5 last week. Now it's moved on up to number 3. I'm going to say it, listeners. It's the 80,000 strike. Almost 10,000 contracts, 9,900 contracts are now open on the 80,000. I'm going to say that again. The 80,000 strike. That's up 2,200 contracts since our last show. So nearly 10,000 contracts from this time last week. It's just, it's fascinating how much paper there is on that strike. A, B, it's growing by leaps and bounds. We were just talking on the show towards the end of last year, listeners, laughing at the 30,000 strike in January, how outlandish that seemed. And now here we are talking with a relatively straight face about the 80,000 strike in Bitcoin. It's both fascinating and mind-boggling at the same time. Number 4, we got the 20,000 strike. So back in the rearview mirror there with about 9,600 contracts. Oh, that's up a little bit, about 500 contracts from last show. And round out the top 5, it's an even crazier strike, listeners. It's the 100,000 strike. The only thing that makes it a little less crazy is A, a little bit less size, and B, it hasn't added any volume really since last week. It's about 7,700 is what it was last week as well. So at least this week, no one was piling into the 100,000 strike, thankfully. 80,000 is about as insane as they got. But still, these are some levels, listeners, that you don't really see in other products, but you see them routinely and for obvious size in the world of Bitcoin. Speaking of size, not a lot of size going up on the CME Bitcoin options front. About 76 contracts on the tape on actually 79 contracts on the tape on Friday, every other day. Much less than that. Similar story on the futures, a decent week, not a heck of a lot to write home about. Friday, about 8,000 contracts. Thursday, 13,000. Wednesday, about 10,000. Tuesday, 8,500. And Monday, 13,000. So a decent week, but again, kind of matching everything else in the crypto space. Nothing really blowing the doors off this week as we head on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. This is the portion of the show where we explore all the products outside of the big dog, which is Bitcoin. But before we do that, I do believe I hear our guest line ringing yet again on this 100th episode spectacular. Let's see who's joining us next.
Mark, this is Mr. Bill Ulivari from Senecal Capital Management, congratulating you on the 100th episode of the Crypto Rundown. You know that if I purchased a Bitcoin every time I was your sidekick on the show, it would be rolling into Benjamins?
Yes, if we had all just loaded up back on episode 1, Bill. And hopefully there would have been some options to trade back then as well. That would have been nice. And we could have really taken off. Or we just, instead of laughing back in October, if we had picked up our own January 30,000 contracts, what a different scenario it would have been. But yes, fascinating. Thank you for that, Mr. Bill over there at Senecal Capital Management. Let's move on out now to the top 10 out here. Let's see what's lighting it up. All you Doge fans and haters can all breathe a sigh of relief because it's not on the top 10 this week, listeners. Nope. Number 10 is Chainlink, a little bit north of 12 billion. Again, standard caveat applies. Take the market caps with a hefty, a tasty, a large dose of salt. Number 9, Litecoin, still holding up in there in the top 10 at about a 13 billion. Number 8, Uniswap with 18 billion, ticking up a little bit more there. Number 7, good old friend XRP, 27 billion. That one's had an interesting run. We'll get to that in a little bit. Number 6, Polkadot at about 34 billion. Number 5, Cardano. It's at 37, almost 38 billion. Number 4 is Tether. We got about 39, almost 40 billion. Number 3, Binance Coin, 42.5 billion. You know, number 2 and number 1 are. They haven't changed since we started doing this show. ETH number 2, 205, almost 206 billion. And the big dog, still north of the 1T level. Almost, not quite 1.1 trillion, but getting close. 1.07 trillion. Just insane times we live in here, listeners. Let's keep on rolling out to the number 2 on the crypto front. ETH. Before we get into where it's trading right now, let's look back a little bit. ETH was trading, of course, back when we launched our show, much more distant number 2 back then than it is right now. ETH closed at about 127.5 on the 11th of January, 2019. So it's had quite the run there as well, listeners. Coming into when we ran this analysis, it was at 1781. So you're up about 1,400% if you just bought and held ETH since the start of our show, listeners. ETH was also in a bit of an aggressive downtrend when we kicked off this show. It started really selling off on January 6th of that year. Took a big hit the day before we launched our show on January 10th. It lost $23 of its value right before we launched our show, listeners. There was a big attack on ETH Classic, a 51% attack that succeeded in stealing about 40 to 50,000 ETH tokens. So it was a big deal, and it really scared a lot of people out there. And so that was just yet another negative headline to add fuel to the fire there in the savage depths there of the crypto winter, where everyone was piling on crypto. It seemed like the bloom had come off the rose pretty aggressively, and here we are now up 1,400%. The worm has certainly turned. Of course, for this week, coming into Showtime, ETH actually taking a bit of a modest break, down not quite 10 handles, 9.2 handles here on the show. So ETH coming at Showtime is at about a 1770. Listeners, getting out to the vol, a similar story, if not quite as aggressive out there in ETH. Vol coming in pretty firmly, 110.5% is where we were this time last show, and about an 87%. So firmly below the triple digits now. And again, a level we haven't seen in ETH in quite some time. So in general, seen a little bit of the vol getting sucked out of the crypto marketplace. Will this remain? I have a hard time believing we're going to see vol stay low, especially at these lofty valuations. These things move, and it's going to keep generating some more vol. So probably a bit of a respite this week, but I wouldn't be surprised if we see more vol ticking in again in the near future. 30-20 SKEW in ETH, 2.7. Last show this week, about 4.3. So ticking up a little bit there. In terms of volume, same story as in Bitcoin, kind of a light volume week. The most active day was 124 million worth of notional going up on DEREBIT, and that's a far cry from what we saw not too long ago, almost 400 million going up on DEREBIT, 300 million. That's what we come to expect out there. So this past week, pretty light. Some days struggling to even make 100 million worth of notional. So again, a bit of a quiet rest week out there on the crypto front. Let's go on out to the OI, see how that's shaping up since our last show. Calls leading the dance much more firmly in ETH still than they are in Bitcoin right now. Calls at about 849,000 contracts open on the ETH side, up 19,000 contracts from our last show. The puts, 643,000. It's actually down about 3,000 from our last show. So put interest declining a little bit in ETH, whereas it's obviously ticking up out there in Bitcoin land. Hourly OI, kind of a similar story to what we saw earlier. A little bit of a tick up here, but nothing huge. The last show was 1.46 million. Coming into today's show, about 1.48 million. And again, we still have that same looming cliff in ETH that we have in Bitcoin options, where it's all March. Right now, March is number one far and away. 556,000 contracts are in that March expiration. So I said there are about 1.48 million contracts open So you're talking a good clip of that. About a third of that is going away in about a week, listeners. And that number is actually up 18,000 since our last show here. So nothing else is even close. The next closest is June with under 300,000 contracts open there. Then we've got D's with about 220,000 or so. So again, all quarterlies and a lot of that going off the board next week. So it's going to be a very different show from an OI and from an overall SKEW and everything else perspective this time next week as well. ETH tends to have these large chunks of OI go the way of the dodo. We haven't seen that as frequently in Bitcoin. We're starting to see that a little bit more out there as well, but ETH's been doing this for a while where we just kind of fall off a cliff from an OI perspective and it takes a little while to build it back up. Let's see if that's the case again next week. In terms of strike action, this is kind of a similar story to last week. Number one strike is 400 strike still. That's unchanged at 83,000. Let's hope when March goes the way of the dodo, some of those will go with it. It's absurd that the number one strike out here is still the 400 strike. Number two is the 1600 strike. That's about 71,000, up about 10,000. And then we got the 320 and 480 strikes out there kind of taking up the rear. So interesting stuff out here in ETH. It'll be fascinating to watch next week how this OI evolves. Does it keep rolling into April or does it keep going out into the quarterlies instead, which is where it is now, and just keep piling up in June and even in D's. It's hard to say D's right now. We're still in March, but that's where a lot of the OI is starting to pile up. So fascinating stuff. How much of these 400s will finally come off the board? We'll find out this time next week. In terms of other coins out there, Ripple, like we mentioned, XRP having a big week, up 15 cents. Coming into showtime, it was rocking at about 59, almost 6, back up to that level where it's kind of gotten its wings clipped in the past. Gets up to in the 60s, certainly into the 70-cent range, and there's sellers for XRP. So it'll be interesting to see how long it can maintain this bid and what's driving it up here. I haven't had a chance to dig up on the latest of XRP, but it's very much, for the most part, been a series of negative headlines out there for the better part of 2021. It hasn't really had the joyous effervescence, shall we say, that most other cryptos have had so far this year, but clearly something boosting it up this week. It'll be interesting to see how that carries it up. And Dogecoin also ticking up a whopping 0.000114 since our last show. So Dogecoin finally getting a little bit of love. Not enough to break into the top 10, but a little bit of love nonetheless. You know what else has love? It's you folks. Let's get into a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions. Before we open up your questions and our polls and everything else, I think we had someone else joining us on the guest line here for our 100th episode. Spectacular.
Congratulations on the 100th episode of the Crypto Rundown from all your friends at ARCA.
Well, there you go. The folks over there at ARCA chiming in as well. It has been fascinating to watch the ebbs and flows in the world of crypto and the exchange front since we launched this show as well. There were a legion of them, a little bit fewer coming into 2021 now, but an interesting space to watch. A lot of volatility on that front as well. Speaking of volatility, we asked you folks last week our question of the week. Everyone talks about different products and saying they're synonymous with volatility. Could be Tesla, could be Bitcoin. All the people obviously think of Bitcoin as a very volatile asset. Less so this week, but still a very volatile asset. Of course, volatility itself, VIX, or the mother of the memes, GameStop. So we put it to you. Which of these has the highest 30-day volatility? Which one is the king of the products everyone says is synonymous with volatility? No cheating. Use your gut, and your guts were accurate, listeners. 62.4% of you came in with the mother of the memes, GameStop. Number 2 was Bitcoin, so right behind it, 17.6%. Well, not right behind it, a distant number 2, but still number 2 nonetheless. I thought Bitcoin would get a little bit more love given how volatile it has been of late, but obviously folks listen to the show. They know the comparative levels of volatility. Number 3, Tesla, 13.6%. It's getting harder and harder to disassociate Tesla vol from Bitcoin vol, but a fascinating beast nonetheless. Only good for number 3. And VIX itself only at 6.4%. That surprised me because VIX should have been a little bit higher on people's radar. We ran the numbers when we did the poll. We checked them again at the end of last week, talked about them live on Volatility Views. But in general, here's how it broke down. You folks are correct. GameStop, when we posted that poll last Monday, so right before I think the show last Monday, it had a whopping 335.4% 30-day at the money volatility. Again, if you don't know what that means, listeners, check out our educational content. We'll walk you through it there. Number two, though, people forget about VIX. Volatility itself. They say VIX is at 20, so how high could it be? But listen to our volatility programs. You know, the volatility of volatility, aka VVIX and others, have been north of triple digits for the entirety of the last year. So you know it's going to be something north of 100. And when we posted that poll, it was at 158%. It's actually a very aggressive day. Markets were moving quite a bit. Vol was coming in quite a bit. So it was maybe a little bit more active day than normal out there. But still, it was north of triple digits, which puts it clearly in the number 2 spot. At the time we ran the numbers, which was right before our show actually last week, Bitcoin vol was at about a 95%. And then we had the Tesla vol bringing up the rear actually at 73.1%. So that's how they actually shape up. And looks like our audience poll, except for VIX, was pretty smart. They were certainly savvy on the GameStop front, but it didn't rank with VIX number 2 the way I thought it would. But interesting stuff nonetheless. You folks are a savvy bunch. All right, next up, we got a question here from Trade for Increase, who's listening to our show talking about the ETH 400 calls that are contracts that are open out there on the 400 strike. He wanted to know, where can you trade crypto options, i.e. the ETH 400 puts or calls? Well, that's a good question. We talked about this on the show in the past many times. That's one of the few real obstacles still for the crypto options market here in the U.S. Outside the U.S., different ball game, Europe, Australia, all different types of rules of engagement, all different regulatory scenes. But here in the U.S., it's still a pretty tight regulatory environment. So if you want to trade crypto options here, it's predominantly Bitcoin and it's predominantly LedgerX and CME. And CME are going to be the big futures and the options on the futures on their Bitcoin reference rate. LedgerX probably a little bit more suitable for you from a size perspective. We've had some interesting anecdotal discussions about those on the show, but I haven't waded into those waters myself. I want to get out there a little bit and start testing those waters again because I knew they used to be pretty wide. I'm hearing anecdotally they're starting to come in a little bit. If you're willing to work your orders, you can get some stuff done over there on LedgerX. Now, unfortunately, you asked about the ETH 400s. That's a different beast. ETH predominantly still trades on DEREBIT, listeners. And right now, there's really no viable way we can recommend for our U.S. audience to trade options on DEREBIT. You can, of course, tunnel in with the VPN and all the other things that are outside of their EULA and outside of their terms of service. But if they catch you tunneling in, they're going to freeze your account. And that's obviously, you don't want to have a large amount of money at risk like that on a regular basis. So it's hard for me to recommend, hey, go out there to DEREBIT and sling them. Now, that said, CME did just launch the ETH futures. They're not super liquid yet, but they're doing more paper than you might think. They're at 1,000+ contracts a day, which for a new product is actually pretty decent. So if you want some ETH exposure, and if you're going to be trading the 400s, you're effectively trading the underlying future anyway. So maybe you want to take a look at the ETH futures over there at CME, Mr. or Mrs. Trade for Increase. That's probably right now, in terms of regulated U.S. venues, that's kind of the only game in town for you out there. Next up, we have a question from Gary. Gary wants to know, what do you think about Powell's comments on crypto? Yes, it's hot off the presses. Powell, yet again, holding court this week. And he says cryptocurrencies, he called them not really useful stores of value. And he says the Fed's going to move slowly on this front. He called cryptocurrencies primarily a speculative asset. And he said the Fed's not in any hurry to develop a central bank digital currency. Take that last one first, because that's been a hot topic of speculation since we launched this show. Is the Fed going to get into the digital currency realm? At least right now, the answer from Powell is no. So that should probably ease speculation on that front for a while. The rest of this, Gary, quite frankly, doesn't surprise me. I didn't expect Powell to be very receptive to the world of crypto. It's hard to fault when he says that it is a speculative asset, because right now it predominantly is. I mean, these valuations here north of 50,000 for Bitcoin, 1,700 for ETH. These are digital assets. At the end of the day, unlike a stock, unlike a lot of other things that you can trade in the markets, don't really have a fundamental value. The entirety of their value is based on what the next person will pay for it. So it is by definition a very speculative asset. If someone's idea of what they want to pay for Bitcoin changes, that value changes dramatically. Also, there's a lot of whales out there that can affect that price pretty substantially on a session by session basis out there. So it is not surprising to me that the Fed chairman would be moving very slowly on that front. That doesn't really concern me. I'd much rather have the regulators be a little bit more avant-garde when it comes to this and start looking at this space more, because it's obviously putting up numbers. It's putting up volume. The regulators can have more concerns about the value of the underlying itself, but still, of course, approve things like options to trade around these things, because there's probably a better argument for a viable options market around an underlying that you're dubious about, because you want to be able to hedge and speculate to the downside on that. So interesting things afoot. I don't think this really puts a crimp in the U.S. regulatory waters, because this is not like, Gensler coming out and saying this. So it'll be interesting to see from that front if we start hearing similar comments coming out of, let's say, Gensler or some of the other regulators out there. Then that would be a different ballgame. But right now, this doesn't really surprise me. It doesn't really seem like it's surprising the crypto market as a whole. It's kind of shrugging this news off as well. So interesting stuff out there. Good questions, everyone. Gary, trade for increase. And of course, everyone out there who voted in our polls. All right. And that music means we've come to the end of the epic 100th episode spectacular here on the Crypto Rundown. We tried to give you a flavor of everything you've come to expect from us on this show during its over 2-year run now, which is crazy to say out loud. A great guest doing some interesting new innovative stuff in the world of crypto and indeed blockchain, breaking down all the trading going on from a volume, a volatility, a SKEW, all the other fun perspective in the big dogs, Bitcoin and ETH, and of course answering all your questions about everything going on in the world of crypto derivatives. We want to thank everyone out there who's been joining us over this 2+ year journey. It's been a fascinating one, from the lowest of the crypto winter lows to now the loftiest of the, I'm not sure what they're calling this era, the post-Musk crypto highs. Who knows what they're calling it? I'm sure there will be some term in history books down the road. But right now, super lofty, I think, is a technical term we could throw around out there. But I want to thank all of you out there, including all of you who've joined us in the last 6 months or year. We know we've seen a huge influx of people there as well. It's been fascinating to look at these markets, seeing how they've grown and how they've evolved over the last couple of years. And I don't expect that to slow down anytime soon. We'll expect to see new products, new players, new innovations coming. If our poll is to be believed from a couple of weeks ago, you folks think an ETF's on the horizon sometime this year. That's going to change the game demonstrably as well. Then we can talk about not just the underlying trading, but the options on that ETF. And that will be a game changer for a lot of people out there. So fascinating stuff in store for us. Again, I want to thank everyone who joined us on the 100th episode spectacular. We had, of course, our guest, Jerry from ARCA Labs, and everyone else who joined us remotely, wishing us success and congratulations on our 100th episode. Thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for voting in our polls. Keep doing all of it. Remember, if you like what you hear, keep rating and reviewing as well. It really does help new folks discover the program. And we'll see you back here throughout the week with so much great content hitting the network. If you're just listening to the Crypto Rundown, you're missing out on a ton of other great content. And we'll see you back here next Monday for another episode of the Crypto Rundown.
This episode is sponsored by Demand Deribitives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Deribitives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.